Hello everyone, Paul here from the APN Academy. So let's continue with our top-down analysis and show you exactly how we do implement the content we have been giving you guys on this channel and see if we can actually use them practically in the markets, right? So we're going to break down real time price movement so that you can be able to understand how to do analysis and be able to utilize exactly what we have been teaching you guys on this channel. I hope you guys can stay tuned until the end, right? So that you can learn something new. Now, when we start from the monthly time frame, previously we talked about CAD trying to make a retracement, which has made, and now it's trying to reject, right? So that has been observed here. When you go down to the weekly time frame, we did have this impulsive move, and I talked about it, saying that in case you want to measure where the retracement could come up to, you take your Fibonacci retracement tool and you drag it up to where the retracement started. And you can clearly see that the market came exactly into the Fib levels that we talked about, 38, 50, and the golden ratio. As long as it's not broken, we are still expecting impulse correction, higher high, or impulse correction, double top, so impulse correction, lower high. So we expect to see one of these happening, either this or this or this, right? So monthly, weekly are speaking the same thing. Let's check if daily agrees with all this, right? Now, when you come down to daily, we spoke about this structure here that the market broke downwards, and currently it's where the market tends to be heading. And also when the market was coming down, we had this turning point here that currently the market has broken above, and we expected it to retest, which exactly the market has done, right? So now we expect the market to be coming to this area here, right? So those who do short-time trading, these are the levels that you could be utilizing. We have a market that closed above this area here on Friday. Today is a Monday that I'm making this breakdown. So we expected this retracement here before we can continue. Of course, we do have some minor turning points here that could make the market react. Like here, this level here made the market react, but we need the price to come and retest this area here. You can just adjust it like this. We need the market to come and retest this area here. So if you go down to H4, you can clearly observe there was a proper change of trend. The market was making lower low, lower high. The last time we talked about CADJPY, it was still on a downtrend. Then finally, it gave us a loss of momentum and even a change of trend. And then it started making higher highs and higher lows. So currently, you can clearly see we're making highs, lows, highs, right? So after creating this structure here on a retracement, you can actually utilize this in case you're a scalper or intraday. The structure is there. We would like to see if the market breaks above here, then we can be continuing higher. But currently, what we observe is in monthly, we expected this retracement here, which the market has done, to come to these structures here. When you come down to weekly, we expected the market to give us impulse correction. I'm just going to attach the topic of Fibonacci. We have studied this, right? Impulse. After an impulse, we expect a correction, which the market has done. After that, and also we talked about this structure on the left. If you watched the CADJPY breakdown, that was properly aligning with this area, and you can see the market has rejected that. Then when you go down to daily gave us an M upwards, right? And we expected the market to retrace at least. And also now we have broken this structure and retested it. It's an improper retest still, though the market may give us a push up before coming to properly retest it. So those who trade CADJPY, I hope the topics that we have just rediscussed here, or like it's a bit of practice, makes much more sense. So when you go down, let's try to take another one. Let's try to look at another example. Actually, let's just look at the USDCHF. Now, as usual, you start from the monthly time frame where you get your direction from. So I'm just going to just bring it down. When you come to the monthly time frame, we have a market that gave us an M, then gave us a retest of the neckline, made a low, retested that point, and then now we have broken these structures here. We have broken a strong level of previous support. This was a strong level of support, and also the market reacted here, but the current month, we still have some days, 6 to 7 days to close it. If the market closes below here, we shall just expect a retracement before we can continue downwards, right? So that's the direction that we have in monthly. Then when you go down to the weekly time frame, what do we clearly observe? In the weekly time frame, also it's not different. We have lower low, lower high, lower low, lower high. So this area here has been broken downwards. What we expect, a push upwards. And also since the market has broken more than one turning point, this one here, this one, plus also when you look at your left, we had this turning point that was broken, making it an impulse. M plus an impulsive move. What does it call for? It calls for a use of a Fibonacci retracement tool and also an opposite candle coming into the play. So you can mark all the Fibonacci retracement tools up the golden ratio as long as the golden ratio is not broken. So I'll mark that. I'll also bring this and mark that. I'll also bring this and then mark this, right? So let me just delete this. So we expect the market to give us a retracement into these areas like the monthly is showing us before we can continue downwards, either to make double bottom, higher low, or even a lower low, right? Let's wait and see what price will give us. Then when you go down to the daily time frame, what do we observe? Now, daily also we have an impulse, right? So when you see an impulse like this, breaking this turning point, this becomes an impulsive leg. Still, you can use Fibonacci just to confirm what we have marked in the weekly time frame. When you draw it to calculate, see it's almost the same level besides this one. This level is the same, this level is the same, just besides this one. So the levels almost remain the same. We expect a push there. And the market already gave us a W, right? So we expect a push to the neckline, which has not been done properly. Then we can see a retracement into this area here. What we're interested in is what we call a weak momentum. We need the market to retest this area here with a weak momentum if we're to continue downwards. It's what we would like to see here. I've already spoken about strong momentum like this one here, and also a weak momentum in several videos. I hope you guys now know what strong and weak momentum means, right? So monthly, weekly, and daily are communicating the same thing. Now let's check into some of the entry time frames like H4, H1. Now, when you look at this also, we had the market decelerating here and losing momentum, which was a clear sign of its changing trend. But alternatively, we don't have a proper retest into any of the structures that has been broken that can give us a push higher, right? So you can actually expect this market, if it can push slightly up before reaching that, we expect it at least to come back down to give us a test to the structure before giving us a weak retest into those levels that we're talking about. Let me just repeat that. If this market pushes from here, because we don't have a proper retest here, if the market will give us a deeper retest is okay, but if it doesn't and breaks above this, you can jump onto the move. If it breaks above, then you can take your trades into here, here, or even here. But then we shall expect the market to be continuing downwards, depending on how the market is retesting, right? We need a weak momentum into this retest before we can push lower. So that is how we look at USDCHF, and I hope you guys can utilize it. Compare it with your breakdown and see if it is actually matching, right? So let's take another example. Okay, for the purpose of making the video short, I think we can just stop here. Two things that we have implemented, a trending market, and also I've spoken about momentum. I've also spoken, both the examples had a Fibonacci retracement. So we only use Fibonacci retracement where there's an impulsive move, right? I know most of you use it a different way. If it works for you, that is good, but Fibonacci shows us hidden levels of support and resistance. So if you have an impulse and the market is breaking every turning point that you've marked, or every support or every order block is being broken, so you will need to draw Fibonacci to identify where do I expect the market to return to, so that I can continue that movement, or so that I can get into the movement in case I have missed it. So those who wanted to trade USDCHF and CADJPY, I really hope this will help you. And also, like, we have done like a reminder or revision of the topics that we did post earlier. We shall soon resume with new topics. If you've not subscribed, make sure you do so. And if it was your first time coming across, do not also forget to turn on the notification bells. And those who have been watching, we appreciate the support, and I hope we're really easing your way to consistency. Have a great time.